Major markets built on a boost to sentiment with safe haven slipping. Video analysis. http://ntvforex.com News ID B280784 2020 12:57:10 p.m. Market overview. Risk appetite got a welcome boost yesterday, and this has filtered into today's session. The stronger than expected US ISM manufacturing data for July helped to improve sentiment across the risk spectrum yesterday, buoyed by the better than expected new orders component. This allowed a better breadth of rally on Wall Street, pulling a rally on the oil price and pulling trades away from safe havens such as the yen and the dollar. The move has also enabled a mild œbear steepeningâ of the US yield curve, longer dated yields rising faster than shorter dated yields, something which tends to be linked with more positive risk environment. The question is whether this momentum can be built upon now. Progress is being made in the talks in Congress over how to replace the emergency employment support in the U.S. However, there is nothing concrete yet. Also, amidst the positivity in the ISM data, the employment component deteriorated and will add caution for the non-farm payrolls data later in the week. Taking a step back, it seems that these moves are generating a consolidation. The huge dollar selling pressure of recent weeks may have abated, but it is not reversing. It is still likely that agreement in Congress would be a key driver of the next decisive move. Overnight, the Reserve Bank of Australia did little to change monetary policy. Wall Street closed with a breakout to multi-month highs on the S&P 500, which was up 0.7% at 3,294. Futures also show a continuation of this move, with the E-mini S&P 0.2%. Asian markets also continued to move higher, with the Nikkei 1.7% and Shanghai Composite 0.1%. In Europe, this is translating to gains on DAX futures by 0.5% and FTSE futures by 0.1%. In Forex, there is a risk-positive lean, although moves are quite slight, with AUD and NZD mildly outperforming, and JPY weaker. In commodities, gold is a shade lower, silver a shade higher, whilst oil is just giving back some of its gains from yesterday. It is a relatively quiet day for the economic calendar today. Into the US session, there are US factory orders at 1500 BST, which are expected to grow by 5.0% in June, after growing by 8.0% in May. NBSP chart of the day: ANZD USD. As the US dollar has threatened to mount a technical recovery in recent days, the pair has pulled back from $0.6715 towards a key crossroads. Two decisive negative candles in a row means that support of a 5-week uptrend has been broken. The pullback is now testing the first of two key support levels. Support from the breakout of the old key resistance band between $0.6585 $0.6600 is coming under pressure now. How the bulls react in the coming days could be a key indication of the near to medium-term outlook. Momentum is now tailing off, with the MACD and especially stochastics lines beginning to deteriorate. The RSI is though once more back around the low 50s, where rallies have taken from in the past 2 months. A decisive close under $0.6585 would confirm a near-term top that would imply $0.6515, but also suggest that the higher low support at $0.6500 would be about to come under pressure. The Kiwi tends to react to moves on the Aussie, and the initial moves from the RBA meeting seem to be fairly muted. However, near-term negative pressure has not abated yet. Hourly indicators are turning lower with a more negative configuration holding. A move back above $0.6640 would improve the outlook. NBSP Brent crude oil: even as it has meandered sideways in recent sessions, the outlook for oil still has the potential to throw in a surprise every now and again. A sharp intraday move higher formed a positive candle into the close last night and changed the recent bias of negatively configured candles. Nothing has overly changed, but it helps to build confidence for the bulls that the important near-term support around $41.30 is not about to be imminently breached. The outlook has been neutralized in the past week or so, but the bulls are suddenly looking more assertive once more. This needs to be carried into today's session now. It is interesting to see the Bollinger Bands are now at their most tight since March 2017. Tight Bollinger Bands tend to be a precursor to a sharp break, so we must be on increasing alert now. What is really needed in this market is conviction. That would mean a run of decisive candles, large bodies to put an end to a very quiet phase of trading, as Brent has built a tight range between $41.30 and $44.90. Decisive closes either way would be a signal. NBSP Dow Jones Industrial Average. After the downside tests of recent sessions, the Dow bulls got some semblance of control back yesterday with a decisive positive session, closing back above the 26,610 pivot. This moved the market to a one-week high and ended a short run of lower highs. It has reopened the July resistance of 27,070 once more. The market has left decent support now around 26,000 and strengthens the 25,525 reaction low. Another positive technical factor for the medium-term outlook is that since the 55-day moving average, currently 25,960, turned positive in May, this is the second time it has been used as the basis of support for near-term corrections. There is now a small gap open at 26,440 which ideally needs to be filled, but simply from putting an end to the near-term corrective phase, creates a more positive outlook to buy into weakness once more. NBSP. Read more analysis here. Euro USD, GBP USD, USD JPY, Gold. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.